Bitcoin has had an extremely strong rally of a 90% from the lows back in November of 2022. And now we're sitting in a place where everyone is questioning whether we are heading to new lows because this is one big, massive fake out. Well, in this video, I'm going to explain to you exactly why this is not a fake out and what is likely to happen based on historical data. And we're also going to talk about why that historical data is even something that you need to pay attention to. So first and foremost, let's look at some previous rallies, right? Let's go ahead and look at the last rally, which was 2018. Again, we said that it was eerily similar to the last rally where we had the final sell-off. Then we created this we had the little dip here. Then we started to have the U-shape, really strong rally. And then we create these flag patterns where we just keep heading up. And even though there's divergence on the chart, you continue to see Bitcoin rally throughout that all the way through the quarter. So this was about 195 days from the low to the high, but it was really about 90 days from once it started its first major green candle. So 337% rally is actually about 340. Okay, but then what happened, right? And we're going to look at liquidity cycles here in a second too, but you can see that the drawdown was 72% from the high. So we came up 300%. And then retraced all the way back about 72%, which was crazy. But if you notice, actually from the lows here, right? Did we go past that low? No, we did not go past that low. So this was in fact the bottom. I'm going to show you how eerily similar these cycles repeat here in just one moment. It is honestly pretty scary almost how similar these cycles are. So we'll see. You've got one other opportunity to buy when Bitcoin does dip after its rally, but again, it is not lower than its original rally. Let's go ahead and look at the previous cycle before that. And honestly, this is the only other cycle that we can really study because back in like 2011, 12, it doesn't make sense because Bitcoin's flying from, $1 to a couple hundred. So it doesn't make sense to look at something that new. But if we're looking at this, right, in 2015, we come down to the bottom here, right? This was the bottom wick from 15. So we kind of had like two highs, almost similar to what happened in 2021, 2022, where we had the high, right? Then we sold off when China banned all the miners, and then we came up to new highs. It wasn't that dramatic. But again, we had a kind of a double top situation in 2021 as well. Then we had the sell-off, right? This big candle here. We had a 93% rally, which is just above what we've had thus far on the rally. And then guess what happened? We had another sell-off in correction. Let's actually see what this correction was from the highs to just about this low right here. This is about a 37% correction. But again, if you look at what we had here, we did not have new lower lows. So again, this low was the actual low for the cycle. And then this next pivot low was higher than the previous low. And then you never go beneath that again. You never go beneath that low again. You can see we just head into the next bull market because then we had the halving cycle right in here in April, and then you head to the highs, and then again 2018 played out, right? We had the sell-off, we had this pivot low that we just discussed, we had a higher low right here after the 72% sell-off from a 340% rally, and then guess what happened after that? We had the halving, and then bam, we came right into 2021. All right, so another thing I want to draw some really big attention to, because a lot of crypto guys don't pay attention to this. I look at many different sectors, I looked at different assets, I really understand what's going on in the macro economy because I know that it impacts the price of Bitcoin and crypto to even more extent than something like the halving cycle. I actually think that there's just been a coincidence with the halving cycle lining up with liquidity flows and interest rates. And that's why we've kind of seen these 4-year cycles play out very, very eerily similar because that's kind of the cycle that the Fed has been on. But that's a whole discussion for another video. I do want to cover this right here, right now, though. If we look at the last cycle, okay, this is the federal funds rate. So this is interest rates in the US. All right. And we know that interest rates and credit markets, they control everything. If you start to understand credit and how interest rates impact markets, I mean, this is literally the Holy Bible, this along with, money supply. So when you start to understand that markets are really just reflected based on what's happening with rates and money supply, you really start to understand how markets work and how they function and why they go up and down. And if we look at This is, contrary to the popular belief. When you start to raise rates, this is what people do believe is markets tend to go down because people are worried because now debt is getting more expensive. People spend less money. People make less money. Markets typically go down. But what happens is when you pause rates here, which has happened in 2019, the very beginning of 2019, January of 2019, guys, that's when you see markets rally because they like to understand that, oh, wow, now we can expect interest rates to not go up anymore. Okay, they pause rates. The next thing that they're likely to do is lower rates, which can be perceived as bullish, but markets price things into the future. So if we look at what happened in 2018, okay, we had that sell off the entire year. We had the low here in December, and then where did we start to see the rally? Into January. So January of 2019, and what happened here, guys, was this. Okay, remember the first rally in 2015 I showed you was only 90%. Well, 2018 into 2019 rally was 340%. Why was it so much higher? I think it's because the Fed paused rates, right? This is typically very bullish for markets. Even if you look at what the stock market did as well, it rallied really hard on this news of the pause of interest rates. Okay, and then we saw it rally. Then after you see rates drop, this is when the whole pandemic crash happened, and then markets came down and Bitcoin sold off 72%. But that is likely what is happening right now, guys. We went through the fastest rate hike in history. Bitcoin has already been rallying because some believe that, number one, the cycle is playing out, and number two, that the Fed is about to pause rates, which again is very bullish because that allows the market to then price in the interest rates coming down. But ultimately, usually what happens is when rates actually come down, it's actually really negative for markets because the damage has already been done by the hike of rates. But we are going into a time where people believe that April into May, we're likely to pause rates. About 90% of people believe that we are going to be pausing rates into May. And then we're likely to see that rally. So we'll see. We need to keep, an eye on what's going to happen with interest rate decisions over the next month or two. And then we'll be able to judge, hey, is Bitcoin going to have just a 90%, rally like it did in 2015? Or are we going to see that really, really big 340% rally? Regardless, again, guys, you don't want to be chasing these cycles, right? You don't want to be, FOMOing in as prices going up, because then what happens, ultimately, there is going to be a pullback. It doesn't mean we're going to new lows, but it does mean that if you are patient during this time, you typically have about a year and a half of sideways action in order to accumulate, okay? And that's exactly what I am doing and we're doing with our funds is making sure that we're setting ourselves up for success in selling through the buying pressure and then holding cash. And then when markets come back down, that is when you double down, guys. So right now we've had about, again, a 90% rally. I do think it is very likely that we head up to at least 32, which would be, these pivot lows over here, this pivot high right here. I think that's a pretty significant level. I think at least we're looking at 32. That is very likely. And then I do think that, it's a potential. The highest that I think is the potential is 48%, but I'm putting much more, obviously, probability on 32 being the high here, but we'll see again. If they pause rates in May, we could totally see Bitcoin rip up to like 48 and really surprise people and stop at this pivot high right here. I think that is kind of the best case scenario, and then a pretty decent pullback from there if that were to occur. Let's say it just goes to 38. I'm kind of budgeting in about a 43%, 44% rally or pullback to about 18,200 if we only go up to about 32, because then that would look something like this, which again, very, very similar to previous cycles. We've got the pivot low here. We come up, re-rally, then we come back, but we do not come down to new lows. Also, a lot of people sitting in altcoins. I'm sitting in some alts as well, and Bitcoin has had the strongest dominance. What is going to happen, guys, is, again, if you're patient and you understand how the flows of money work, specifically in this asset class, money will flow into altcoins. Eventually, Bitcoin, I wouldn't be surprised if it breaks through this resistance right here, which is Bitcoin dominance, which is how much of all total crypto does Bitcoin's market cap make up. Right now, it's about 47.45%. I do think it's going to head a little bit higher. And then as Bitcoin breaks through the 30 range, I do believe that it's going to start to spill into altcoins, and you will see some alts really, really rally. Now, people say, oh yeah, Jeff, how did you know that was a bottom? Prove it to me. Well, we did prove it to you. We did post on January 21st. And I clearly did not call the top, but I did absolutely call the bottom. I said, I think this is the week is the bottom for crypto. That was right when FTX was going bankrupt and everyone was calling for crypto to go to absolute zero, because when there's peak fear, guess what that means? That means you got peak great prices to be able to buy. So I did call the bottom on November 9th, and I got a lot of hate for it. But again, looking more and more like that actually happened. Now I want to show you one more thing. And if you're not following me on Twitter, by the way, I'm not just calling myself out here. I post a lot of really free, really great content that's absolutely free, all about macro and the rallies that we have. So go follow me here. We post about 3 threads a week. So people find those really valuable, and I know you will too. So check me out on Twitter at Jeff Sekinger. Last thing I want to show you is how eerily similar these rallies are, guys. And I don't just say this because I think I can predict the future. I say this because it is absolutely the truth. If we were to look from the high here in 2014, right, into 2015 bear market, guess from the high to the low, how many days was it? 378 days. All right, now let's go ahead, and we had about 115x rally. Now let's go ahead and look at the next high to the low. Okay, 2017 to 2018, how many days was it? Oh, it was 378. Well, that's weird. Wasn't it 300? Oh yeah, it was 378 back here. 300. Oh, okay, cool. So, okay, what happened in the next one? Well, let's go to the high over here. And we saw the high right here, and this was 378 days. Huh. That is pretty weird, isn't it, guys? Yep, it is, because I'm telling you, these cycles are so eerily similar. There are little differences for sure. 100%, right? There's always differences. People are always like, oh, well, this time is different. Yeah, every time is different. No time is ever the same point in time and the same historical data. But we do see a lot of things play out eerily similar, and that is exactly what just happened once again this cycle. 378 days from the top to the bottom. From the top to the bottom, from the top to the bottom. So will we see this happen once again, where we see the rally off the lows, 90 to 340, right? Somewhere in there. I think it's going to be honestly somewhere between there. And then we do see a sell-off, but it is not going to new lows. It'll create a slightly higher low, and then it'll head into the halving, and then shebang, a lang into 2025 bull market. Let me know your thoughts in the comments below. Thank you so much for watching, and I'll see you here on this next video.